Welcome on board then, Dipan Mehta, and talk about exactly that. Dipan, hi, morning. Good to have you on the show. Dipan, I guess it was all the Maruti magic yesterday, and that sort of, pilfered through the entire auto pack as well. But how much more of a material gain do you think Maruti can get out of this UP discount registration now for hybrid cars?
Yeah, good morning, and thank you for having me on your show. I think it's not just the actual material benefit which may or may not take place, but it is a signal to the other states as well that this is something which they can implement in order to reduce pollution and give encouragement to cleaner vehicles, and that's what has driven the sentiment up in Maruti. And if other states also follow suit, then certainly Maruti will have a phenomenal edge over its competition because the best hybrid cars, the most popular ones, are the ones which Maruti is producing. So that I think is the clear signal that this is the way if the government is thinking at the state level, maybe even at the central level, then that could certainly be very positive for Maruti. And that's the reason why I think the stock has gone up because on the whole, if you see the numbers which came through for the month of June were pretty much tepid. And this quarter also, we don't have any great expectations in terms of top line, bottom line growth for Maruti because essentially automobiles are going through a bit of a soft patch.
Okay, fair enough. Let's get in a sense then from you as to what you're making as well when it comes to some of the stocks like IGL, Gujarat Gas, CNG, etc., with sources indicating that some sort of a tax rationalization could come about soon. How much of a fillip would this be for the city gas distribution companies?
See, I think the government wants to encourage more and more use of city gas for industrial as well as residential. But the big problem with the city gas companies is that 2, 3 years ago, maybe 3, 4 years ago, transportation was going to be a big growth driver for them, especially public transportation, because a lot of the taxis, the Ola Ubers, and the buses were going the CNG way. And then we've seen a surge in electrification. And these days, I think whether public transport, whether through Ola, Uber, or taxis, or even buses, is going more towards the electrification way, EVs per se. And that reduces the long-term demand for piped gas. And on the whole, I think that that's a big negative. End of the day, these companies are a bit like utilities, and growth rates are not going to be that spectacular going forward. Also, I think some of the companies which were, looking at getting the growth rates going through new territories, that also has not come through. Companies like Gujarat Gas, which have got new territories, those growth rates also did not flow through. So I'm not that positive on city gas companies. No doubt they are cheap. They're available at reasonable price to earnings multiple, good dividend yield. So in markets like these, when you're looking out for good cheap PE stocks, they certainly fit the criteria. But look, I'm very suspect of the growth going forward.
Meantime, let's also get in a sense as to what you're penciling in, Dipan, when it comes to the earnings season just around the corner. And of course, IT as always kicks off the earnings season. What is it that you're expecting by way of numbers?
See, I think IT will be the same old story, what we've seen last 2, 3 quarters, stagnant to slightly lower earnings. That's been factored in. But more importantly, it's always the management commentary. How are they looking at growth going ahead? And with the US economy, what is their kind of assessment that once interest rates start to get cut over there, will it boost discretionary demand for tech services? And most importantly, I think the question that everybody on the street will ask the IT company is how big is this AI opportunity? Is it for real? Is it going to translate into like double-digit growth rates for next 4, 5 years for IT companies? That's the big question. And if we get a positive response over there, then I think IT may take leadership position. I think the first few results will immediately set the tone for the entire sector.
Okay, that's the take coming in on what to expect from IT. In the meantime, you've got two new listings as well today, and MQ Pharma is the one which has been really talked about, and of course the other one being Bansal Wire as well. Dipan, any of this new paper that you may have subscribed to other than these two listings which are slated for today too?
No, I don't go for any IPOs because they are generally very expensive compared to the listed peer. And I have noticed this trend that our companies come with IPOs and then next 2, 3 quarters, the numbers don't come through. They're always disappointing. So I just want to wait for a year before a year after the IPOs are over and done with, to really assess the true potential of the company, the quality of the management, the quality of the disclosure, and also the valuation.
Assumptions doing the rounds. Indeed, our estimates tell us that if the listing gain on MCure is even 10% of a premium to its issue price, the FY25 PE would be about 23.3 times. On a 20% gain, it would be 25.5 times. At a 30% gain, it would be 27.6 times. And if indeed it's a 40% jump up that you see on the stock price, it's going to be as expensive as nearly about 30 times on its FY25 basis. So that's that on Emcure Pharma. In the meantime, bunch of other stocks which have been in focus of late, and we've been talking about, of course, the strength in autos, but Reliance as well has really been the other one which has been quite the mover of this last lap of the rally. So that aside of course, banks have really come to the fore. Dipan, what about banks? Because they started off with a lot of gusto, and then came the quarterly updates from HDFC Bank, and then the story seems to have paused for a little bit.
Yeah, that's right. I think we are seeing, I would say, selective growth in the banking sector. Some banks are showing decent growth rates. Others, especially PSU, HDFC, have disappointed. But this was a similar situation last quarter also, where banks came with good, I would say, encouraging numbers when it came to advances and deposit growth. But then when the actual figures came for the quarter, there was a disappointment because the pre-provisioning profits were pretty much flat or slightly lower across the board, I think, for almost every single bank. And that trend may repeat over here as well. End of the day, the banks are constrained by a lot of pressure on net interest margins. And that's because of the kind of challenges they have in terms of raising low-cost deposits. And that will only change once the RBI, changes its policy, increases liquidity in the system, maybe even reduces the interest rates also. So until that point, you will expect that bank profits may be under pressure. Also, the benefit of lower NPAs is now gradually getting neutralized as the base effect starts to come into play. So this earnings season could be pretty disappointing for banks also, because the net interest income may not show a significant jump. The pre-provisioning profits could be flat to declining. And actually provisions year on year may show an increase. And you may have a situation where a whole host of banks will report lower net profit, lower earnings per share as compared to the June quarter last year. So one should be mindful of this thing, and accordingly, I think, strategize. Long-term prospects are phenomenal, no doubt about it. India requires the banking sector to expand. It's a great play on the economy, and economy is poised to grow at 7-8% or thereabouts. So banks are bound to do well, but they're in a bit of a spot, I think, in this quarter, perhaps even next quarter.
And let's get in your thoughts as to what the outlook is when it comes to the entire FMCG basket.
No, I'm not that positive on FMCG, and they will have a minor uptick because of higher rural spends. But end of the day, a lot of categories in FMCG are very mature, and growth rates are low, kind of single digits or so. And that doesn't really enthuse us. We're looking for companies which can grow 15-20% top line. And there are very few companies in FMCG which will do a 15-20% top line growth, that on a consistent basis for next 3 years or so. So I would like to be underweight FMCG. There are many consumption stocks, but there are challenges. You see what happened with Titan, very disappointing set of pre-quarterly release coming through over there. So I think the entire consumption theme is becoming a bit challenging to play. And at the exception of real estate, which is still showing a lot of momentum, I think across the board, we are seeing the traditional consumption-oriented stocks being under pressure, and this quarter will reflect those as well, be it retail or be it entertainment, to an extent healthcare. So I would be a bit cautious. Maybe travel and tourism may do well, like airlines, hotels may continue to do well. But one needs to be extremely selective when it comes to playing the consumption trend.
Meantime, just wanted to understand from you, Dipan, as to how you're looking at the entire travel and hospitality theme with religious tourism, with the kind of boost that we've seen to domestic tourism being taken by the government. A lot of these stocks have been in the limelight. Has the trade already played out, airfares included, airline companies rather included?
Very positive on airline companies. The disclosure, we and our clients are invested in Indigo. Long-term prospects are phenomenal. There's good consolidation taking place within the industry. And recently, there were reports that a lot of the tier two, tier three airports, which have been constructed and operationalized over the last 2, 3 years, they are seeing steady growth in traffic, sometimes as high as 25, 30% or so. So the entire travel habit of the nation is changing. They are taking more flights even to smaller and smaller cities and towns, and that's very positive trend. End of the day, airline is a very difficult industry. It's not easy to enter. So there are decent entry barriers, and a lot existing players have some sort of a moat as well. Companies like Indigo have yet to explore international travel in a big way as well. So very positive on airline companies. If there's a soft quarter or so, then according to me, from long-term investors' perspective, that could definitely be an entry point.
Okay, sure. That's the take coming in on some of those airline as well as travel-related stocks. I mean, Dipan, we've been talking quite extensively this week about the CNG bike launch by Bajaj Auto and what kind of disruption that could potentially cause within the two-wheeler space. What are your thoughts?
No. CNG is not going to cause a disruption. Two-wheelers are clearly going to be
Disruption, what I
electric.
was getting at was, I meant competition to some of the other two-wheeler players. Apologies, yeah.
No. The real competition for two-wheelers is coming from Ola Electric. It's the fastest growing two-wheeler company, and clearly it's gaining market share. The entire auto industry is going towards EV, mind you, so there's no question about it. You need to be extremely careful when it comes to two-wheeler companies, because the way these new models are coming for electric two-wheelers, that's going to change the entire landscape of the industry. And although Bajaj Auto, TVS, Hero, they all have got EV strategy, I suspect that the crown will go to a new player. And as of now, it does appear to be Ola Electric. Look at the way they are expanding their capacity from ground up, and they're completely backward integrating into manufacturing batteries as well. At some tipping point will come when entire industry will go EV. And although the margins are lower for EV, and that's going to affect the long-term prospects, but that's the way forward. So whether you launch CNG two-wheeler or so, it's not going to make much of a dent, or not going to be a big growth driver for Bajaj Auto, nor is it going to change the dynamics of the industry.
All right, appreciate your time, Dipan. Thank you for joining in with your thoughts. Not going to affect the dynamics of the two-wheeler industry, but nonetheless, it is much anticipated.
If you like this video, then like, share and subscribe to ET Now.